Whatever comes up has to come down. That's a strange thing to say for somebody that runs the Bitcoin strategy channel, right? Bitcoin just went up and made another high and made another high and never stopped climbing, really. What I'm referring to are charts like this, or charts like this, or how about this one here? All of those charts have one thing in common. They are small altcoins that have poor tokenomics. There is tons and tons of inflation, new coins hitting the market, and so a lot of people are betting on falling prices. But what happens then? If the coins are so bad, why do they sometimes shoot up like this? And if they do come down all the time, where is the potential opportunity here? Because there is one. This chart I showed you over here is WorldCoin. It's actually a specific WorldCoin chart. It's the WorldCoin chart relative to Ethereum. So we are looking here at an altcoin that will more than 10x its supply in the next 12 months. And so a lot of people are betting on falling prices because that's usually what happens, right? When there's not enough adoption and more token printing going on, then the price goes down, right? Demand and supply determines the price. But what happened here just recently? Why did the price go up like this? Why did WorldCoin in the matter of a few hours outperform Ethereum by 30%? We've got even more extreme examples. Look at this. This is the relative chart again, relative to Ethereum, of Wing Finance. And Wing Finance is a pretty small DeFi project. The market cap of that coin, the liquid supply, is even smaller. And so that means that not only the decline is faster with token printing, it also means that these pumps, these short-term pumps, are way more pronounced. There's no doubt that additional token printing is depressing the price relative to Ethereum pretty constantly. But look at this increase. Look at this short-term pump. It's not 30% anymore, it's 2000%. So even the worst of the coins,
they can 20x
before they then finally
crash down badly.
When assets are that obviously bad, when the supply increases that quickly and a lot of people are betting on falling prices, then there is an opportunity for some whales to take money from those short sellers. So here's what happens. When you want to bet on falling prices, no matter how you do this, right? If you do this via derivatives and futures contracts, or whether you do this directly, what you're effectively doing is you're borrowing the token. You take up a loan denominated in that token, and then you hope for that token to go down in price. That then later, when you want to settle the loan, you can buy back the token for cheaper. So you basically have a liability denominated in the loan, and that liability needs to be covered. So in order to take a crypto loan, you need to have collateral. You need to have some kind of security that you can say, okay, I can pay back that loan. You need to have some kind of safe asset, Bitcoin, Ethereum, stablecoins, that you deposit first, that you have as collateral, and only then can you bet on falling prices. Now, the really big players, the whales, they know that, and they know that at some point in time, the short sellers get liquidated. Their liabilities go so expensive when the price of the token goes high enough that they have to buy back the token even when it is high. So when you're betting on falling prices, you've got a limit to how high the token can go until you have to cover the position, until you have to buy it back. And so when there's a token with a lot of short selling interest, where a lot of people bet on falling prices, then the whales will buy up that token, push up the price, squeezing the short sellers, squeezing the people that bet on falling prices. A short squeeze is nothing else but a short-term price manipulation to force people out of the market. And this is exactly what happened with WorldCoin. That's why it's now going back down. The drop so far from the top was 11%, and I expect this to continue. If not too many people short this again, right? If people short this again, then the whales might do another short squeeze. There can be secondary short squeezes, and we have seen this in Wing Finance. The initial squeeze in Wing Finance was only 300%. A second squeeze happened of 600%. And since that squeeze, we are now back down again by 85%. There are hundreds, there are thousands of those kinds of examples, both in the traditional markets, like in stocks, as well as in crypto. In stocks, we had this with German car manufacturer Volkswagen when there was the merger between Porsche and Volkswagen. We also have another case where more retail was involved. Retail tried to short squeeze the institutional hedge funds with GameStop. You remember that? The evil hedge funds shorting GameStop, shorting more than there was float available, so free floating shares. And so when you bought up enough GameStop shares, then the short sellers had to buy back the shares. The hedge funds lost and the retail investors made some handsome profits because the price shot up. Now, where in all of this is the opportunity? If you know that something is short-term price manipulated and you know that the actual value should be much lower than the current price, you can short. But you have to be careful. You shouldn't be shorting when everybody else is shorting. The best shorts are the one of weak assets that nobody knows about. You don't want to short what everybody else is shorting because then you get squeezed out potentially. Let me do a bit of marketing for our own private group. We short altcoins regularly here. This is the Bitcoin Strategy Premium Telegram group, and here we got an interesting message. Shouldn't we short XVS? XVS is Venus Finance. A very similar situation to Wing Finance we just talked about, right? A very small altcoin. Now have a look at this chart. Doesn't that look very pretty? The price shot up by 50% in a matter of a few hours. And long term, relative to Ethereum, we also have an underperformance. And so here we are making money with approaches that are not that common. Most people simply just buy a random basket of altcoins, hope that their basket will then outperform maybe Bitcoin or Ethereum. That's not what we do. We've got the thesis that most altcoins underperform Bitcoin and Ethereum. And so when you bet on falling prices, especially for weak altcoins, and especially when they get short-term price manipulated, the statistics are in your favor. If you buy an altcoin and only 1 out of 100 meme coins outperforms and pumps, then you're pretty much buying a lottery ticket. And the likelihood that you're going to lose is very, very high. But if you do the exact opposite, right? If you bet that that lottery ticket will not make it, then most of the time you will be okay. All you have to do is avoid the hyped coins. And of course, the very crowded short positions. So the shorts everybody is betting on because then you might get squeezed out. If there are secondary squeezes, like we have seen in Wing Finance, right? One push, then other people short again, a second push, then it makes sense to double down. Of course, it's important at the same time to follow the news. Why did the price pump? Is there maybe something happening besides just price manipulation that's pushing the price up? If that's the case, then maybe it makes sense to stay away. But if there's nothing, right? If there's only silence, there's no news in the Discord, there's no news on the project's blog or Twitter account, then it's likely price manipulation. It will come down and then you can simply just dollar cost average into your short position. You don't dollar cost average into Bitcoin, your dollar cost averaging into the price getting back to reality. If that kind of trading approach resonates with you, then feel free to check out the premium membership. It's currently $75 per month. There's a lot of other benefits here as well, not just a Telegram group. There is regular videos, etc. But more information is on the website. There's a whole video just describing the benefits. Thanks for watching and see you in the next one.